Hong Kong is one of the world's richest cities. It's got a bustling economy, rich infrastructure, some of the world's wealthiest people, and most importantly, it is primed for a strong future. But one of the controversial aspects of Hong Kong's economy is about the region's debt. Most importantly, the region's foreign debt, meaning their obligations beyond the region's borders. This is an important aspect of Hong Kong's economy, as according to data published by the Hong Kong Monetary Authority, Hong Kong has a gross external debt of over 14.3 trillion Hong Kong dollars. In USD, that is over 1.8 trillion. This makes Hong Kong one of the most indebted regions for external debts in the entire world. How could this be? How can one of the richest cities become so indebted? Is it because of China? Could it actually be the underlying fuel to Hong Kong's economy? Or is Hong Kong going to collapse in the future because of it? Well, to understand why, we must first understand the concept of external debt. A country's external debt is also known as foreign debt. It is the obligation of a country to repay borrowed money, which is usually in the form of loans or bonds, to foreign creditors. This debt is incurred when a country borrows money from foreign lenders, including other countries, international financial institutions like the World Bank and International Monetary Fund, IMF, private banks, and investors. For instance, China has become a major lender to many countries, especially in Africa and Asia, through its Belt and Road Initiative. This initiative involves large-scale infrastructure projects, which often require substantial loans. Another example is through financial institutions. The World Bank, for instance, provides loans and grants to developing countries for development projects that aim to improve infrastructure, education, health, and other key sectors. Similarly, the International Monetary Fund offers financial support and policy advice to countries facing balance of payments problems or other financial crises. There are loads of ways for a country to borrow money overseas. If Hong Kong has over 14 trillion Hong Kong dollars in external debt, does that mean it borrowed money from the likes of China, the World Bank, or other means? Well, what we should actually know is that external debt does not always mean loans or borrowings. In the case of Hong Kong, the region's external debt is actually the evidence that it is a financial hub. What is a financial hub? It is a place where financial activities are concentrated, often characterized by a high level of international financial transactions and the presence of major financial institutions, exchanges, and markets. To put it simply, the financial activities gathered in Hong Kong are its banks. People overseas, from mainland China to the United States, to Australia, and even places in Africa, have opened up bank accounts in Hong Kong. When they do open up a bank, they would most likely deposit money in Hong Kong. Hong Kong, after all, is a place where rich people want to store their money. It is safe, stable, and offers a unique blend of Eastern and Western cultures that is highly attractive. When offshore people deposit money into Hong Kong, this then becomes what is called a liability. Liabilities are basically what the bank owes to customers. The banks, after all, don't own this money. Customers can withdraw it any time. So the data published by the Hong Kong Monetary Authority shows that Hong Kong has 14.3 trillion Hong Kong dollars in foreign debt. 8 trillion of that is actually from banks. Some of the 8 trillion are then due to customer deposits. Just take a look at Hang Seng, which is amongst the largest banks in the country. In its annual report, it showed that its current, savings, and other deposit accounts amounted to over 1.1 trillion Hong Kong dollars. Unfortunately, they don't show just how much is deposited by foreign customers. But it is more likely that a huge portion of it comes from overseas. After all, most of the bank's liabilities stem from this figure. In the dataset published by HK Monetary Authority, they showed that 8 trillion is short-term, meaning it could be payable in the next 12 months. Or It could be deposits. Only 253 billion Hong Kong dollars is long-term, which could be either long-term deposits or actual loans. A small significant amount. Now that we have a clear understanding of their external debt, we still must discuss the remaining 6 trillion Hong Kong dollars, as it is still significant. A small portion of this debt comes from the general government, but it is very, very small, of about 45 billion Hong Kong dollars. That is only 5.85 billion US dollars. The remaining big portion comes from direct investment intercompany lending. This type of debt is distinctive as it generally involves transactions between parent companies and their overseas affiliates. In the context of Hong Kong, a global financial hub, these intercompany loans are a reflection of the city's pivotal role in the international finance and business sectors. Intercompany lending, as part of direct investments, signifies the movement of capital within multinational corporations. These funds are typically used for a range of purposes, including, but not limited to, the financing of new ventures, support for ongoing operations, and the balancing of liquidity among various subsidiaries. Beyond its external debt, there is also a concept called International Investment Position, IIP. This is the measure of the value of a country's external financial assets and liabilities. The International Investment Position provides a comprehensive view of a nation's financial involvement with the rest of the world. Assets in the IIP include investments in foreign stocks, bonds, real estate, and direct investments in foreign companies. These assets represent the wealth a country has invested abroad. On the other hand, liabilities include similar investments made by foreigners in the country's stock market, real estate, government bonds, and companies. A country's IIP becomes negative if its liabilities to the rest of the world exceed its assets, suggesting a net debtor position. Conversely, a positive IIP indicates a net creditor status. For Hong Kong, however, the figure is a massive net positive. Data from the Hong Kong Monetary Authority also shows this, which amounts to over 48 trillion Hong Kong dollars. 17.5 trillion of which are direct investments, 14.3 trillion are portfolio investments, 8.2 trillion are equity and investment fund shares. Even reserve assets are 3.3 trillion. The liabilities are also big, but not as big as the assets. It is about 34.3 trillion Hong Kong dollars. That means Hong Kong's net international investment position is about $13.9 trillion. Finally, before we end the video, we must discuss and appreciate the economic impact of having trillions of dollars in foreign deposits. For Hong Kong, this financial influx has several profound implications. Firstly, the presence of such vast foreign reserves is a clear indicator of the global confidence in Hong Kong's financial stability and its banking system. This confidence, in turn, enhances the city's reputation as a major financial hub, attracting more international businesses and investments. Secondly, these foreign deposits contribute significantly to the liquidity of Hong Kong's banking sector. This liquidity is crucial for the functioning of various financial activities, including lending and investment operations, which are vital for the economic growth and development of the region. Banks can leverage these deposits to extend credit to local businesses, fostering entrepreneurship and stimulating economic activity. Thirdly, the large foreign currency reserves held by Hong Kong's banks play a pivotal role in maintaining the stability of the local currency, the Hong Kong dollar. These reserves act as a buffer against currency volatility and provide a substantial safeguard in times of economic uncertainty or financial crisis. However, it's important to note that such a substantial concentration of foreign assets also brings certain risks. For instance, Hong Kong's financial system could become excessively dependent on the health of global economies. a global financial crisis or a sudden withdrawal of these foreign deposits could have severe repercussions on the local economy. Additionally, the influx of foreign capital can also lead to asset price inflation, particularly in the real estate market, potentially creating economic imbalances. But anyway, do let us know what you think. Thanks for watching.